Want to know the secret to building wealth? The answer is pretty simple. Invest in assets that generate income. Yes, the whole idea is to put your money to work for you, so it can earn you more money. It makes total sense to invest in assets that produce income, without you constantly having to actively work for it. So sit back and get ready to learn about the top 6 assets that can help you achieve your financial goals. Let's get started. Number 6. Stocks. Stocks are one of the most popular assets for building wealth over the long term. Investing in stocks can provide a high rate of return, but it also comes with the risks. One way to use stocks to create a cash flow asset is through dividend investing. When a company earns a profit, it can choose to pay a portion of that profit to its shareholders in the form of a dividend. Dividend stocks can provide investors with a steady stream of income over time. To find dividend-paying stocks, investors can screen for stocks that have a history of paying and increasing their dividends over time. They can also look for companies that have a strong financial position and a sustainable business model. Another way to generate cash flow from stocks is through covered call options. A covered call is a strategy where an investor sells call options on a stock that they own. The investor receives a premium for selling the call option, and in exchange, they agree to sell the stock at a predetermined price if the stock price rises above a certain level. While covered calls can generate cash flow, they also come with risk. If the stock price rises significantly, the investor may have to sell their shares at a lower price than they would have received if they had not sold the call option. It's important to note that investing in stocks comes with risk, and there are no guarantees of returns or cash flow. It's important to do your own research and understand the risks before investing in any asset. Number 5. Own a small business. Owning a small business can provide a high rate of return and can also be used to generate cash flow over time. However, it is important to note that owning a small business also comes with significant risks and requires a lot of hard work and dedication. One way to use small business ownership to generate cash flow is through profits generated from the business. Small businesses that are profitable can provide a steady stream of income for their owners. Owners can use the profits generated by the business to cover their personal expenses or reinvest back into the business to fuel growth. Another way to generate cash flow from a small business is through dividends. If the business is structured as a corporation, the owners can receive dividends based on the profits generated by the business. Dividends can provide a steady stream of income for the owners, and they can also reinvest the dividends back into the business to fuel growth. Owners can also sell equity in their business to investors in exchange for cash. This can provide a source of capital for the business and also generate cash flow for the owners. However, it is important to note that selling equity in the business dilutes the ownership stake of the original owners and can impact their control over the business. It's important to note that owning a small business comes with risks, including market fluctuations, competition, and operational challenges. Owners should do their own research and consult with professionals before investing in any small business asset. Number 4. Cryptocurrency. Cryptocurrencies are a relatively new type of asset that can be used to generate cash flow. While cryptocurrencies are known for their volatility, they can also provide high returns to investors who are willing to take on the risk. One way to use cryptocurrency to generate cash flow is through trading. Cryptocurrencies can be bought and sold on exchanges, much like stocks. By taking advantage of market fluctuations, traders can buy cryptocurrencies at a lower price and sell them at a higher price, generating profits. However, it's important to note that trading cryptocurrencies can be risky and requires a deep understanding of the market and technical analysis. Another way to use cryptocurrencies to generate cash flow is through staking. Staking is a process that involves holding a certain amount of cryptocurrency in a wallet to support the network and validate transactions. In exchange for staking, investors can earn interest on their holdings. The amount of interest earned depends on factors such as the amount of cryptocurrency staked and the network's reward structure. It's important to note that cryptocurrencies are still a relatively new and evolving asset class. As such, they carry significant risks, and investors should do their own research and consult with professionals before investing in cryptocurrency. Number 3. Bonds. Bonds are a type of fixed income investment that can be used to generate cash flow. When you buy a bond, you are essentially lending money to an issuer, such as a corporation or government, in exchange for regular interest payments and the return of your principal investment when the bond matures. Bonds can provide a reliable source of income for investors, especially those who are looking for a more stable investment option than stocks or real estate. The interest payments generated by the bond can be used to provide regular cash flow, either to cover expenses or reinvest back into other investments. Another way to use bonds to generate cash flow is to invest in bond funds. Bond funds pool the investments of many investors and use the collective funds to buy a diversified portfolio of bonds. The interest payments generated by the bonds are then distributed to the investors in the form of regular dividends. It's important to note that bonds do carry some risks, such as credit risk and interest rate risk. Credit risk refers to the possibility that the issuer may default on their payments, while interest rate risk refers to the possibility that rising interest rates may cause the value of the bond to decrease. As with any investment, it's important to do your own research and consult with professionals before investing in bonds. Number 2. Franchises. Remember the last time you visited McDonald's and that wonderful conversation you had with the store's owner? Of course you don't, because those store owners are never there. They outsource all the day-to-day operations to any individual else, which turns their franchise purchase into a pretty passive earning source. A franchise purchase presents you the proper to use a parent company's trademarks, exchange secrets, and proven business plan in exchange for a percentage of the location's profits. The requirements for starting a franchise varies by brand. McDonald's claims one of the most expensive franchise fees at $45,000, and the initial investment to build or purchase a store ranges between $1 to $2.2 million. Plus, they require you to have a whopping $500,000 of liquid assets. Your return for investing that sort of cash? Well, you need to request an investor package to know for sure, but the average McDonald's location spits off $2.6 million of sales per year. Other franchises, popular franchise Subway, accept a much higher percentage of applicants and allow absentee ownership, which is a much more investor-friendly arrangement. Number 1. Real estate assets. Several real estate investing strategies can generate consistent revenue. However, one of the most common is investing in rental properties. This consists of purchasing a home or multi-unit property and marketing to tenants to earn rental income over time. Rental properties offer the opportunity to generate steady rental income over long periods of time. By hiring the right property manager, you can ensure your rental property runs smoothly without a high level of involvement on your behalf. One of the most attractive perks of investing in rental real estate is enabling investors to increase their wealth without significant capital upfront. Additionally, real estate investing can provide the opportunity to expand your portfolio more rapidly when compared to other investing opportunities. For example, you could purchase a single-family home to begin renting out. You could then use the income generated from this property to purchase another rental property, thus adding another income-generating asset and expanding your investment portfolio. There are a few different types of real estate to consider, ranging from a single-family home to an apartment complex. The property type is based on the number of units available, and depending on your investing goals, some may seem more attractive than others. If you are intimidated by the prospect of owning properties but still find yourself interested in real estate investment trusts can be an attractive income-generating asset. Real estate investment trusts are similar to investing in stocks, but they are specifically real estate-oriented companies. Real estate investment trusts can specialize in apartment complexes, office buildings, storage units, or parking garages. Entrepreneurs who choose to invest in real estate investment trusts will be able to work in the real estate industry without walking through the upfront costs and setup of acquiring properties. Thank you for watching our video. We hope you found this information helpful in building your wealth and achieving your financial goals. Remember, each asset has its own unique advantages and risks, so the key to success is a solid strategy, patience, and discipline. If you found this video informative, don't forget to hit the like button and subscribe to our channel for more content on personal finance, investing, and wealth building.